What up, Hyperchange? Welcome to another episode. Today we're going to talk about Tesla's Q4 2019 deliveries. They broke records, delivering an all-time high of 112,000 cars in the quarter. Really exciting stuff. This came out a couple days ago. Sorry I haven't been able to post an update. I've been traveling in Los Angeles with the Third Row crew. We did an interview with Elon Musk, actually. That's going to be posted on that channel. So much to share with that, but not yet. So stay tuned for that. But anyway, now I've had some time to reflect on Tesla's Q4 delivery numbers. So I want to give a full breakdown of what I thought they reported. It was well above my estimate, and why I think this has huge implications for Q4 financials and beyond. I'm going to update all of my financials for 2020 in this episode as well. So let's just get right into it. This is the chart of the quarterly vehicles deliveries heading into Q4. I think this is, by the way, the most important number you can look at when tracking Tesla and analyzing this company. How many cars or computers on wheels are they selling each quarter? This is the most fundamental metric of, is their business doing well? Remember, the car market for a lot of companies is actually struggling, flat, stagnant, down, as people go to ride sharing and people go electric to Tesla. So to see Tesla continue growing in the wake of a weak auto market is extremely impressive. But anyway, I'm getting sidetracked. So to hit their low end of the guidance heading into the quarter, Tesla would have had to deliver 104 or 105,000 vehicles. So that's about what everyone was expecting. Instead, Tesla posted deliveries of 112,000 cars, a record for the company. First time they're over 100,000. I think the chart kind of speaks for itself. But I mean, so many of us, and originally at the beginning of the year, the question was, after the record Q3 and Q4 2018 and a weak Q1, it's like, is demand going to pick back up? The whole demand cliff theory that short sellers were talking about. Well, organic demand, word of mouth, the quality of the Model 3 and just how amazing of a product it is has led to huge sales growth, despite the fact that Tesla does zero advertising, record sales every single quarter after that, culminating in a 112,000 delivery Q4. So this has very, very exciting stuff. 23% growth year over year off that record in Q4 2018 when they had the much bigger tax credit. So even though the tax credits are going down significantly, Tesla's sales are still going up. And a crazy bright spot in the quarter was Model S and X deliveries, which had kind of fallen off a cliff in Q1 2019. And we recently got news that there would be a Plaid upgrade to the Model S and X potentially coming in Q3 2020. So with that big upgrade coming in 2020, a lot of people moving to the Model 3, it seemed like the Model S and X were kind of dwindling. And this is one of the most profitable parts of Tesla's business, is these higher margin vehicles that they already have the production lines built for. So this was kind of a drag on the company's gross margin and financials. So for this quarter to see a big jump in, or a relatively big jump in Model S and X sales here to almost 20,000 units, the highest they've had all year, still down year over year, but this was a kind of bright spot and also implies very strong numbers for the company's financials. So overall, on an annual basis, this is what I was expecting. I was expecting them to hit that low end of the guidance of 360,000 vehicles. Here's what they actually reported: 367,500 or so. I rounded down just in case, because the delivery numbers aren't final. But as you can see, this is the numbers for Tesla. So once again, another record year. Literally every single year, they deliver more and more vehicles or computers on wheels. This year was up 50% growth. Once again, in an automotive market that is flat to stagnant. So now switching over to the deliveries PR, a couple things I want to highlight. This is Tesla's official post. I'll put a link to it in the description. You can see that production was 105,000 units. Deliveries were 112,000 units. So Tesla sold almost every vehicle they had left in inventory this quarter. This means the cash flow will be even better. This is how Tesla's business works. Some quarters they build more cars than they deliver. Sometimes they deliver more cars than they build, but that can have a huge swing on the cash flow of the company because they're getting paid for cars that they already had to pay to build. But anyway, the short story is the cash flow is going to be extremely strong because of deliveries outpacing production. It looks like Tesla almost ended the year with nothing in inventory. I mean, there's reports of people going into stores and literally seeing no cars. Even the showroom cars have been sold. Another thing to point out here is the subject to lease accounting portion of this. Tesla's cars, even though these are mature, they've been on the market for over a year or two now for even the Model 3. Only 14% of Model S and X are leased. Only 7% of Model 3s are leased. 8% of their total vehicles are leased. If you compare this, I did a quick Google. The average leasing, or the average uptake of leasing for vehicle sales, is like 30%. It's even higher for luxury vehicles because consumers just need financing to be able to afford them. So Tesla here is outselling all of its competition and doing it with outright sales. They're not even relying on leasing yet because they don't need to. So that's just another sign underlying of how strong the demand is for these companies' products. We got a couple different hints on Gigafactory Shanghai. I'm not going to spend too much time on this because there is a delivery event supposedly going on in like 6 hours as I'm recording this. It's like 6 a.m. in Shanghai right now, or 5 a.m. in Shanghai right now. So I don't know, apparently that today in Shanghai, they're going to hold some big delivery events. So we're going to get a lot more info about Gigafactory 3 Shanghai. I'll try and make a video about that. But they do include in this delivery press release that they have, we continue to focus on expanding production in both the US as well as our newly launched facility in Shanghai. Despite breaking ground at Gigafactory Shanghai less than 12 months ago, we have already produced just under 1,000 customer saleable cars and have begun deliveries. We have also demonstrated production run rate capability of greater than 3,000 units per week, excluding local battery pack production, which began in late December. So they've already built 1,000 cars. That was as a couple days ago. They're probably even higher than that now. So we can expect to see Tesla start delivering cars by the hundreds here in the near term. But like I said, we're going to get way more details on that very, very shortly. And additionally, that demonstrated production run rate capability of greater than 3,000 units per week indicates, and I've gone back and forth on Twitter with a lot of people about this, about, are they actually building 3,000 cars per week? Is that just a peak rate? My reading in between the lines of this is they're testing their production lines to get up to 3,000 a week, which is equivalent to 150,000 units a year, which is the phase 1 goal of Gigafactory 3 Shanghai. And so it sounds like they're not quite there yet, but they're within reaching distance of that, whether it's, 6 weeks until they hit 3,000 per week, 6 days, or 6 months. I'm not exactly sure, but it's somewhere in that time frame. But the point is, it looks like they're going to hit that, phase 1 capacity of Gigafactory 3 of 150,000 units well before the end of this year. So that's a very rapid scale up of production, like we've been expecting, but to see it here, really, really exciting stuff. And so the last thing I kind of wanted to break down of these numbers is we saw Tesla increase production by 9% quarter over quarter from about 96,000 cars to 105,000 cars without adding a new factory. Yes, they've been building up a new general assembly line at Fremont for Model Y. Yes, they've been building Gigafactory 3 Shanghai to expand production into China, but those deliveries didn't actually happen in Q4. So all of these cars, 105,000 cars produced in Q4, were actually all built at that same Fremont location. So if you have the same factory getting way more efficient, the same fixed costs, but you have more cars being sold to spread out those costs. I think this has a tremendous impact or sign of the profitability of Tesla going forward as their core factory gets more efficient, and it's just a sign and testament of Tesla. They're really supply constrained. It's all about how many cars they can build, because that's basically how many they can sell. So for them to get more and more output out of the same factory is a testament to their pace of innovation in manufacturing, and it has huge, exciting implications for the margins of the company. So welcome to Hypercharts world. We're going to go to Hypercharts because I've updated my financials or my financial estimates after these numbers. You can go to hypercharts.co/Tesla to check out the financials. And I'm even going to put a link to my own estimates in the description below, so you can check that out as well. But this is the Hypercharts of Tesla. Here's what I've added for my estimates. We can toggle these on. This is a new feature for premium. You can model your estimates. So I did put out a video with my estimates a couple months ago or a couple weeks ago, but I've changed them and gone way more conservative and updated them with the official Q4 numbers, just because, I don't know, basically just fine tuning my model. So I want to go over that with you. So here are the official delivery numbers. It says expected because the financials aren't out yet, but these are the real delivery numbers for Q4. So as you can see, that once again, big spike. And I put that into this same Excel model I had in the last video, which I'll also link in the description, which I basically plug in. Here's how many cars Tesla sells of each unit. Here's the average revenue per car. That's what automotive revenue is. Here's what service and energy. That's what total revenue is. Here's my gross margin. That's how I get to gross profit. And then I plug that in to basically get a rough back of the napkin estimate of what I think these vehicle deliveries will translate into financial wise. Here's Q4. What it looks like, I've got them expanding here. We'll zoom in here to just revenue to start. I've got them doing about 7.048 billion of revenue. Still wouldn't quite be as high as Q4 last year, higher than Q3 though. That's because they've shifted more to Model 3 than Model S and X. It'll be the second highest revenue quarter in Tesla history. In terms of operating income, I have them growing profitability this quarter to 364 million. So this is really exciting stuff. Then heading into 2020, this is where it gets interesting. The estimates that I wanted to revise were greatly decreasing Q1 2020 Model 3 estimates, because I think Q1 is going to be seasonally weak in the automotive industry. This is just how it goes. They sell a lot less cars in the first quarter of the year. So I think I was overestimating how much impact China would have, not impacting enough seasonality. So I've taken my Model 3 sales estimates down from 115,000 in Q1 to 80,000. And you can actually toggle table view if you want to see these estimates in table view. But the point is, I had this being 115,000. I took it down to 80,000. I actually had 115,000 every quarter. Now I made it 105,000 just because I think Model Y is going to cannibalize it more. And I just kind of wanted to be conservative. And within Model Y, I have that going from 100 units in Q1 to 5,000 in Q2, up to 75,000 a quarter in Q4. And so I kind of tried to tone everything down estimate-wise just to sort of be more conservative and then have Tesla slowly ramping throughout the back half of the year. as you can see, the trend here is that they will report a small loss in Q1 2020 with that seasonally weak quarter. But once again, that's a huge improvement year over year from Q1 2019 when they lost $500 million. And then I have them being profitable every quarter of 2020 therein out, with producing almost $1 billion in earnings in Q4. Additionally here, this is how I have the gross margin shaping out. I want to highlight this because I have this dropping from 19% in Q4, slightly above Q3, down to 17% in Q1 because I have Model Y scaling, or sorry, well, actually, Model Y, I guess, will be scaling up in early Q1 and Q2, but also China, I think it's going to have a lower gross margin as they get that off the ground. So I had gross margin dipping a little bit in Q1 and Q2 before rebounding later in the year, just because I want to be conservative. Also with the SG&A estimates, this is something I thought was important. I sort of juiced up how much I thought Tesla would ramp up their R&D and SG&A spending. Basically, I had them investing more into growth than I had in the model I made a month ago because, I don't know, I just wanted to assume they would ramp up the spending to facilitate all of the growth in new deliveries. And as you can see, I have SG&A hitting record highs of $825 million a quarter. That's higher than they'd ever been. You know, they had this cost-cutting effort here, but now I have them ramping back up, investing in growth. Same with R&D. I have R&D going all the way up to record highs of $450 million a quarter, by far the highest that Tesla's ever had in its history. So I want to model Tesla, or I want to model in that Tesla continues to invest rapidly in growth, because I just want to be conservative, and I think that's what the company should do. So overall, actually now let's toggle to annual real quick. You can see that I have vehicle deliveries scaled down from about 615,000 now to 550,000 in 2020. That's my estimate. Still huge growth, but I want to be a little bit more conservative with Model 3 numbers and seasonality in Q1. I also just think at a high level here, when I was thinking about my video and I put out my estimates, I think it is still very achievable for Tesla to hit 615,000 deliveries. But I don't know, as a rule of thumb, I just felt like the numbers weren't quite right. And the more and more I thought about it, I wanted to change it. So that's part of the reason I'm making this video, to be transparent, let you guys know what I'm thinking. But I also think it's important to price in being super conservative, or like some level of conservatism. You know, it's a lot of stuff can go wrong. You want to expect things to go wrong and just be on the safe side. And so that's kind of why I wanted to also tone down my estimates, ramp up spending, just kind of normalize it, because I just thought I was too bullish after thinking about it. But even with all that said, if we go to the revenue and operating income line here, this is still resulting in huge growth for Tesla, about $33 billion in revenue, down from about $34 billion in my previous model, but still earnings for the year, $1.35 billion. You know, Tesla goes significantly profitable in 2020 on the back of these vehicle deliveries, and that is what I'm reading. And so lots of exciting stuff to come here. But anyway, I'll put a link to this in the description. You can check it out and play with it yourself. Wanted to give you guys an updated version of my expectations, but at a high level here, I think the Q4 numbers indicate that organic demand for Tesla's vehicles is incredibly strong. Their production or output they're getting from Fremont continues to go up. That's going to have very good implications for their company margins. Model S and X sales surprise, another good thing for margins. They're delivering way more cars than they're producing, another good thing for margins. I mean, we're just stacking up tailwind after tailwind financially for Tesla heading into Q4. I think this amounts to another huge profit, a huge quarter of cash flow as well, and that is what's got the stock moving even higher here. Is yet another quarter of profitability for Tesla, the company that everybody ridiculed and criticized for burning hundreds of millions per quarter a couple years ago while they were getting production off the ground. Now has gotten that production ramp, is delivering almost 500,000 cars per year, set to grow way further in the future, pumping out hundreds of millions of free cash flow per quarter, with cash balance at record highs. I mean, the financial health of this company has never been stronger. The futures has never looked more secure. Tesla is truly transformed from going into startup mode to more mature company, really profitable and cash flow positive in the past couple years, and it's been incredible to watch. So kudos to the Tesla team. This was way beyond my expectations for Q4. So I hope they blow out my expectations for 2020 as well. But anyway, this is Hyperchange. Would love to know what you think in the comments below about Tesla's numbers, about your financial estimates, about how you think this impacts 2020. Leave it below. I'll see you guys next time. Peace.